62. If you are a partnership, whether a married couple who chooses to file as a partnership or two unrelated parties coming together to form a partnership LLC. So you can have a partnership LLC that has its own separate tax return, which is called an information-only return. There is generally no tax liability on a partnership in and of itself. You have your income and your expenses on that partnership return, and whatever your partnership percentage is, if it's 50-50, if it's 60-40, if you've got a few partners in there and it's 25% each, for example, that net income then gets divided out based on your ownership percentage and flows onto your personal tax return. So the net income on the partnership, part of that partnership tax return is a form called the K-1 form, and the K-1 is going to have your net income percentage on there. Let's say, for example, your partnership makes $100,000 net, and you've got two 50-50 partners that are not married. They file separate returns. So $50,000 is going to go on this partner's K-1, and $50,000 is going to go on that partner's K-1, and then they take those K-1s and do their individual tax returns with that included on there. So with a partnership structure that is not an S-Corp partnership, again, that is going to be subject to those self-employment taxes that we talked about, 50% coming from you, 50% your responsibility, and 50% is your business's responsibility. It all lands on you personally by way of your K-1. So interestingly, two partners with each 50% ownership of the business can have two totally different tax ramifications of that same $50,000. If this person over here is married, let's say they've got a working spouse, they have a couple of kids, they've got a mortgage, all of those things that can affect your tax liability, they will have one outcome on that $50,000, whereas this person over here maybe is a single person, no kids, that is their only source of income. They're going to have a totally different tax outcome on that same $50,000. So it does get a little bit complicated depending on, each individual person's separate tax liability. So that's why I find it so valuable when you have a business to have some tax planning, and if you have multiple partners in the same business that are not going to be filing jointly with each other, to have separate tax planning to account for each of the partners' potential tax ramifications of their business.